That is the closing bell on Wall Street, and now it's Market Domination Overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. We've got Caleb Silver, as well as Yahoo Finance's Jared Blickery, joining us here to break down the moves today. Jared, we're going to start with you on that close.
Well, thank you. We've got some records to share in the major indices. The NASDAQ Composite, the NASDAQ 100, and the S&P 500, all closing for records. But what you're seeing behind me is the Dow. That is up 230 points, and I will show you the intraday price action. Just a little bit of red on the open, but for the most part, it was from the lower left to the upper right throughout the day. And the rally really got started on that retail sales report that we got at 8:30 a.m. in stock futures. Here is the NASDAQ up 0.75%, really holding on to steady gains throughout the afternoon here, and the S&P 500 up 0.5%. And I would be remiss if I didn't mention the small caps, which were up even more, up 1%, 1.14% as of the end of the day. Got to check in on the 10-year T-note, closing the day at 4.46%, up 1 basis point. The 30-year yield essentially flat, 5.01%, the same close as yesterday, and the U.S. dollar index up 0.25%. And checking out the sector action, we only had healthcare and real estate to close in the red. Healthcare was down 1.15%, as you can see there in the lower right. But to the upside, we had financials with some of those big bank earnings and now some of the regional bank earnings. That was up 1%, followed by staples and then industrials and tech. Both industrials and tech also closed at record highs today. And let's lead over to the NASDAQ 100, where we can see a lot of the tech stocks in there. Meta, Apple, both closing to the downside, as did Tesla, but the rest of the mega caps were in the green. Nvidia up almost 1%. That is a record high. Microsoft here up 1.2%. That is a record high. And Amazon and Alphabet each up about 1/3%. Switching over to the Dow, we can see to the right half, we already covered the mega cap, so let's talk about some of the individual names here. JP Morgan up almost 1.5%, American Express up 1%, Coca-Cola up 2%, representing the staples, and Disney and Communication Services up 2%. The healthcare names I was talking about that didn't do so well today, Johnson & Johnson down 1%, Mark also down 1%, Amgen down about 0.25%, and then United Health down more than them all, about 1.44%. And I'll send it back to you, Josh.
Thank you, Jared. So, Caleb, the economic data points we got today, I think you would look at those data points and you would say, the economy seems to be holding in there. Just curious your thoughts on that and the market moves.
Well, can I offer you a mint? Because the breath around here is getting really good. Look, you just said small caps were rallying. We had most sectors in the market rallying. That's what you want to see in a higher and upward trend to the right. When you have broader breadth, especially when small caps are rallying, you got to say there's a lot more belief in this market right now. The economic data is not concerning to anybody because it's pretty benign so far. Again, more smoke than fire when it comes to the impact of tariffs. Investors are looking way beyond that right now, and they're saying companies are still printing pretty good earnings here. A lot of them are returning cash flow to their shareholders. We know dividends have been cut a little bit over the last couple of quarters, but they're holding in there, and the buybacks are still strong with the biggest companies, and the performance is pretty good. So you got to be happy with that if you're an investor, and the trend is your friend here. Record highs beget more record highs, and the economic data is not slowing it down.
Investopedia, those fans, I know it's a broad base of investors. You like to say white belt to black belt, right? But generally, Caleb, how constructive are they on the market?
A lot of us and a lot of our readers pile into the same stocks. We ask them what you own. They own basically the top of the S&P 500, the top of the NASDAQ 100, but you do see people going out on the edge for it to take some chances, and that could be for meme stocks, and we've seen a recurrence and a rebirth of the meme stock rage, call it 3.0, so you see a little bit of that, but in general, you're looking at investors who are looking for the next great opportunity. What's the next NVIDIA? What's the next Palantir? And experimenting with some of those names. We've also seen a lot of retail investor activity in the quantum AI names, of course, but also in the power names again. And the power names were a big sector last year because they had to power all these AI centers. As those get built out, a lot of momentum in that sector as well. So our readers like to buy it all, but basically they own the same indexes that we all do. and occasionally they'll step out and get a little promiscuous.
What's on the wall of worry for those readers? If you ask them what their concerns are, what comes up?
Yeah, well, we ask them that every 2 months, and what's on the top of their list is tariffs and the impact of corporate profits, but also relations. It's got to be relations, whether it's Middle East relations or U.S.-China relations, and then, of course, they're concerned about the impact of a recession, of a potential recession, but we've all been kind of waiting around for one for a very long time. We just haven't had it yet. It'll come eventually, but right now, they're not worried about that too much. They're They're cautiously optimistic. They continue to buy. And we asked them, if we gave you another $10,000 that you can just invest discretionarily, they'd put it back into stocks, individual stocks.
Yeah. All right, Caleb. Leave it there for now because Netflix second quarter earnings, they're just now crossing the wire. See the stock down about 1.7% just initially here in the after hours. Joining me now is Yahoo Finance senior reporter Allie Canal. Allie, what do you see in that report?
Well, it seems to be a solid report, so it's interesting to see the shares decline today. Maybe something to dig into a little bit more in the release here, but we did beat expectations of both the top and bottom lines. In addition, Netflix raised full year revenue guidance. So revenue coming in to just over 11 billion versus expectations. Again, that was a beat compared to Bloomberg estimates along with Netflix's own guidance. We also saw earnings per share come in at a beat. They guided to revenue and earnings for the current quarter above Wall Street expectations. And then I said earlier, for full year 2025, the company now expects between 44.8 billion to 45.2 billion. That's ahead of its prior forecast of 43.5 billion and 44.5 billion revenue growth. And it does expect revenue from its ads business to roughly double to about 3 billion in 2025. Now, heading into this report, there were lofty expectations. There had been a back and forth debate on Wall Street when it comes to the valuation. It trades at around 40 times forward earnings, about double the S&P 500. But this is just a conversation that analysts have been having, right? How much optimism has been priced into this name at these levels? We are trading above $1,250 a share at the moment. This is a very expensive stock, a very rich stock. There's been some rumblings on Wall Street whether or not we could eventually see a stock split here. But if you take a look to the back half of the year, we have a very strong content slate. We have the return of key tentpole programming like Wednesday, Stranger Things. We just saw season 3 of Squid Game debut last month. And then on the live content side, they've been doubling down on sports, the NFL, WWE. There's been rumors that they could potentially go after UFC media rights. And there's also reports that they could be partnering with Spotify for a concert series as well. So just seems to be a lot of upside, particularly on the content. And then, of course, on the advertising business as well, which continues to chug along here. Currently, it remains one of the cheapest plans on the market right now. But again, shares are off around 2% in after hours here, Josh.
All right, thank you, Allie. Caleb, so we're down 2%, but of course, heading into this print, I mean, this stock has been a monster. I had analysts come on and telling me, listen, they really like this company. They like the operating fundamentals. They like the execs. They like the content. They didn't love the valuation. I mean, you did have a 40% move this year into this print.
Yeah, but there's a lot of things we might cut in our lives if we have to cut expenses. Netflix is not going to be one of them for most people. They are ingrained into the American living room like no other company has been in a very long time. And I think as long as they continue to add subs.
Did you? It's an interesting point you're making because that was often brought up on this show. There were analysts who came up and said, well, this is one of those names. I'm just curious if you believe this, who said, if the economy gets wobbly, if people get spooked, you actually stick with the Netflix because this is one of the things people will not cut.
Yeah.
You buy that?
I absolutely buy. You know what I get texts from my daughters from college? What's the Netflix password? My dad was emailing me earlier. I can't get back on my Netflix.
I thought they were cracking down on that, Caleb. What's going on?
Yeah, well, everybody needs it and everybody wants, and they won't give it up. We'll give up a lot of things. We'll walk to work instead of drive before people give up their Netflix.
Do you think, let me ask you this, do you think the great streaming wars, is that over and Netflix is king and everybody else is just kind of fighting for second place? Hey, second place can come with a lot of money.
Yeah.
But is that how you see it, or too soon?
I think that they sit atop the throne,
Yeah.
Pun intended there, and they're getting deeper into sports, into live sports. They push in all the right directions. They raise their prices about $1 every year. No one bats an eye. Who else can do that?
Yeah, fair point. Although my 6-year-old, I'll tell you, it's only YouTube for that kid. YouTube. That's the next generation. Who knows, Caleb? Let's check in on one of the top trending tickers on the Yahoo Finance homepage. Shares of real estate platform Opendoor surged on Thursday as retail traders piled into that name. This new excitement in Opendoor comes after activist investor Eric Jackson expressed interest in that stock, telling MarketWatch he thinks the stock could trade over 80 a share in the next couple of years. It's currently around $1.70. Caleb, let's talk about this one. Our colleague, by the way, Jake Conley, has a great story on this. And as Jake was pointing out, what a move. I mean, one month's gains were nearly 200%. The retail enthusiasm, as we mentioned, you got well-known guys like Eric Jackson, he's part of the story. He posts on X, by the way, believes it could be 100-bagger over the next few years. Traders seem to have piled in. What do you make of it?
Yeah, well, again, meme stock 3.0. This company lost some $85 million in the most recent quarter, right? It's purchasing properties. It purchases real estate properties in a real estate market that's essentially dead right now, but it is highly shorted, and highly shorted sends up the antenna signals for the meme stock crowd, because that says pile on in, especially when you have some backing and some big investors who are starting to show interest in it. But in terms of results, they're not there on the financial statements, but they're starting to get there on the stock price. These things usually don't end well. Well, hopefully this one won't have that same type of ending.
All right. Meanwhile, the U.S. House passes 3 crypto bills advancing the landmark legislation to the Senate. Congress regrouped for voting today as Crypto Week in Washington enters a new phase. Lawmakers were considering major bills on stablecoins, token markets, and a central bank digital currency ban. Again, with 3 passed the House and headed to the Senate. Some of the legislative hit procedure snags Wednesday, but also advanced some digital assets. Joining us now is Florida Congressman and Committee Whip of the U.S. House Financial Services Committee. That would be Mike Haridopolos. Apologies, Congressman. Hopefully I didn't butcher it too terribly for you. Thank you for being here, sir. Why don't we start with you, just bring us up to speed. Where are we here with these bills?
Great. Well, thanks, Josh. And it's pronounced Haridopolos. It's a very Greek name.
I'll note for next time.
Got it. Well, today we actually just passed the Genius Act. That is the one that creates the logic for stablecoins. It's the one that will make the United States the center of activity for stable coins. Of course, as we've moved this type of digital currency forward, we've been behind the times, as you know, because of the prior administration's, let's just say, lack of clarity on the whole issue. We're able to work that out in a bipartisan way, by the way, today in the United States House. I just came off the floor in the United States House. And of course, we're going to be moving forward with what's known as Clarity Act and CBDC next week.
One question I had, Congressman, I would bet you, sir, there are viewers watching this and they're thinking, you know what? We don't own crypto. We don't have exposure to crypto. It's maybe not that high on their list of priorities. Explain to those viewers, Congressman, why this was such important legislation to get through now. What was the need? What was the demand?
Well, I think in general, just to give your viewers some notice on it, what we need is that we want the United States to be first and foremost the financial capital of the world. We want to make sure that we can move money quickly, efficiently, and without corruption. And what we do when we're looking at crypto in general, it should be what I would just call it a better electronic ledger, meaning you understand where money is moving, who's moving it, how much they're moving it, and you want to move it more quickly. Traditional banking, of course, has a lot of opportunity. We always talk about bank wires, et cetera, but crypto and blockchain are what really is the future. This way we have what's called a dollar-backed stablecoin, almost like if you went to a casino, you get handed a chip so you can move more easily within the casino, and then you can cash out, of course, when you leave that casino. I'm not saying that crypto is a casino. What I'm saying is it's a form or a coin, almost like a poker chip or device that you use in a casino, so you can move around more effectively instead of putting dollar bills all over the table, etc. So this is a smarter way of doing business. It allows more transactions, and it will do it more quickly. And remember, the other nations around the world are competing with this. I mean, many companies did not come to the United States because they didn't have the regulatory model. And so they went to places like El Salvador, the UAE, Singapore, let alone the EU. We want those dollars and, more importantly, finance to come to America. We want to be the epicenter of capitalism.
Congressman, how much of this was also about, and I'm sure this is a question folks are asking, that it came down to promises that were made on the campaign trail to the crypto industry, to the crypto lobby, which, you know, let's be fair, that's a much more powerful, impactful, influential lobby now.
Oh, they are. To their credit, they got really involved in politics. I can say with confidence, at least from my own perspective, I didn't get any money from crypto when I ran. I'm a new member of Congress. I learned more about the issue. Of course, I serve as the whip of the Financial Services Committee. But this is the future of finance. It's a more efficient way to move money, and it should reduce overhead costs for everyday businesses. That's what really makes the difference. And what was happening is that those investment dollars were going everywhere else in the world because this is where people want to go with their money. Again, we're not talking Bitcoin, we're talking crypto, quote, blockchain. Bitcoin is just one of the realms in which move, and we've seen, of course, a radical increase in that price. But we want to make America the capital of finance, and the way you do it, because people who are in the finance world see this as a more efficient way to move money. And you also have the protections of the American regulatory system, and more importantly, let's just say a stable judicial system that doesn't exist in countries like China. And so we want to be that epicenter. And I think that's why this thing really moved in a bipartisan way. It wasn't about campaign dollars. It was about American financial opportunity to be the epicenter of this growing industry.
The market structure bill, Congressman, on that one, I'm curious how much harder you think that's going to be to ultimately get through. You have heard Democrats raise what they see as these concerns, what they frame as conflicts of interest about the Trump family benefiting from their investments in crypto. How do you see that playing out?
No, that's a great question. I really appreciate it, Josh. And with this one is, to me, I think this is even more important, because you have the stable coin. That's important, but you need to have the regulatory structure on top of it, so you know, if you're an investor, whether you're being treated as a commodity, which the CFTC would regulate, or a financial instrument, which of course the SEC would regulate. And what was happening in the prior administration is that these companies are saying, we want to move these finances to America. They got this kind of blah, blah, blah answer, and there was no clarity. It's the reason why we named this market structure bill clarity. You know who's going to regulate you, how it works, and how to protect the investor. I think this is the linchpin of the whole thing. We've been trying to marry these two bills up, that being the stablecoin bill and the market structure bill, because one is dependent on the other. And I think that clarity is important, because when people who have this money, who want to invest, they want to know who is going to be their regulator, as opposed to this nebulous situation that has been existing for the last 4 years.
Final question here, Congressman. I just want to switch gears on you. The big, beautiful bill, sir. Polls suggest we got a majority of Americans here who oppose this legislation. I don't know if you saw this. Looks like a new one from CNN. They say Americans say 61% to 39% that they oppose the spending bill overall. I'm curious, sir, what you make of that. And do you see that potentially as a warning sign for the GOP, for Republicans, when it comes to the midterms?
Well, look, based on the media reports, I'm not surprised it's a 60-40 split against us at this point. But when I walk through the bill, when I talk to real people on the street, and I tell them, hey, guess what? Because what we did, your taxes are actually going down. Because of what we did, if you earn tips or overtime, let alone a lifetime of work with Social Security, your taxes are going down. If you want to have a strong border wall, they're now protected. I mean, it's the piece by piece that we're going to be able to explain for the next 12 to 18 months, where I feel very confident when people actually find out what's in the big, beautiful bill, that they'll like it. And they're also going to find out what some of these lies about Medicaid. Medicaid is, as you know, is welfare health care. No one who's vulnerable is going to lose Medicaid. Those are people in nursing homes, or of course, people who are disabled, let alone low-income families that have children. They're not losing Medicaid. But if you're an illegal alien, guess what? You're going to lose it, because you shouldn't have it in the first place. And so a year from now, when people see that the most vulnerable were not kicked off Medicaid, they're going to like the bill. And I came here to Washington to put more money back in people's pockets. And if I can say one last thing, Josh, this myth about increasing the deficit is just that. They said that the economy would only grow at 1.8%. Well, when you supercharge the economy with tax cuts and incentives for business to invest in big manufacturing, you're gonna explode this economy in a positive way. We're gonna see 3 and 4% growth rates next year, because we're reinvesting in the business around which the same idea is in mind when we passed the crypto legislation. We want America to be the place to do business and reduce that regulatory burden, and make sure this economy truly takes off. That's our goal, and I'm confident a year from now, we're gonna be able to back that up.
Congressman Haridopolos, I think I nailed it that time.
You nailed it, Josh.
Thank you, sir. Appreciate your time.
Thanks, Josh, for what you do every day. Thank you.
Caleb Silver, meanwhile, thank you, sir, for joining me here on Set Day. Final thoughts for the audience.
Well, when you listen to that and the crypto legislation that is being rolled out, which is kind of antithetical to why crypto was developed in the first place, you know that there are green lights for this industry, and that's why we're seeing record highs across the crypto patch, especially with Bitcoin lately. But you got to think about how this is going to affect people in the digital divide, right? Just like the internet did. If you're not in this asset class, you're going to be missing out on the opportunity. And if you don't understand how how it works, you're going to be missing out on the opportunity. So this is going to require a lot of education. People need to get smart when it comes to how stable coins are going to affect them in their financial, in their banking accounts, in their stock accounts, because it is coming, and we better be prepared for it.
You know what? You always help us get smart. That's why I love having you on the show.
Thank you.
Thank you, my friend. Stick around. Much more market domination overtime. That's still to come.
News about President Trump, it lit up global markets yesterday as headlines about firing Federal Reserve Chair Jerome Powell sent stocks plummeting as yields popped. On today's Stocks in Translation, we're going to look at prediction markets or binary market futures. And here's the definition. These are financial contracts regulated by the Commodity Futures Trading Commission that let you bet on whether a specific event will happen, paying $1 if it does and nothing if it doesn't. It's either or, hence the term binary. And here is a chart of Thursday's price action in the S&P 500 and what was happening in the prediction market. And in green here, we have the S&P 500. Just as the odds, as all those headlines about President Trump possibly firing not President Powell, he's the chair of the Federal Reserve, we saw those odds go up and we saw the stock market go down. It was pretty well timed here. And what's interesting is that stocks were managed to recover all those losses and actually close close to the highs of the day. But now I want to show you a second chart. This is the same prediction market versus the 30-year yield. And you can see here they were actually going in the same direction. And unlike stocks, the 30-year did not come back all the way down. In fact, it stayed above that critical 5% level into the close as it did the very next day. So there might have been some damage done there. And now I want to take a look at a longer term chart of these prediction odds and the S&P 500. This goes all the way back to January 30th, and I'm going to show you the S&P 500 tanking here. I'm just kind of tracing that out here and recovering. And I don't think there's a longer term correlation with these prediction market odds. So I just want to establish that right now. I do want to say that it's pretty interesting that the prediction odds have increased for Powell getting fired as S&P 500 has been hitting record highs. But those prediction odds, at least on a closing basis, by the end of the day, have never exceeded 25%. And intraday on Thursday, they actually hit 40%, but it never even got above 50%. So since we've seen a lot of these binary betting futures kind of rise in popularity over the years, I just wanted to show you a table that compares and contrasts them with auction markets. And so that's what we would traditionally call the stock market or the bond market or even commodity markets. So the first is a payout. In binary betting futures, we have all or nothing. That's $1 or zero. And of course, in the stock market, it depends on the per share price. And that can go up, it can go down, and it goes fluctuates on a minute by minute basis. And then another factor is price. We have for binary betting, we have the implied price change versus the current market value as determined by market participants in these auction markets, the stock market, for instance. And then as far as risk is concerned, we have a fixed max loss in the binary betting. As I said, you can win $1 and you can't lose more than $0, or you can't go down to more than $0. And in the stock market, things are going to fluctuate on a minute-to-minute basis. And then finally, the typical focus here for prediction markets, that's going to be on a single event. It might be what the Fed is going to do. It might be on Powell getting fired. It might be on an election. And of course, in auction markets, in the stock market and bond market, we just have this on an ongoing basis. So as we saw with last year's elections, sometimes these betting markets deliver accurate information that's more so than traditional polls. And with controversial decisions becoming the norm, these markets are only likely to grow in size. So tune into Stocks in Translation for more jargon-busting deep dives, new episodes on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
All right, time now for What to Watch Friday, July 18th. Going to start off on the earnings front. More banks reporting on Friday, including American Express and Truist Financial. American Express announced the results for the second quarter before the markets open. Amex capping off a busy week of bank earnings. Analysts expecting American Express to perform better than its competitors when it comes to credit strength and revenue growth, giving us more insight into the state of the consumer. And speaking of the consumer, we're going to be getting the preliminary consumer sentiment print for July on Friday. Economists forecast that number to rise compared to June's print to 61.5, signaling that consumers are feeling slightly more optimistic about the economy, but sentiment is still low by historical standards. And moving over to housing, the latest housing starts and building permits data is coming out on Friday too. Housing starts expected to rise to an annualized pace of 1.3 million, while building permits hold steady at 1.39 million. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's asking for a trend. Stay tuned.